So, what are the differences between technical and fundamental analysis? Well, there are a few differences between those two analyses, and in this tutorial, I'm going to tell you about some differences between them. I'm gonna distinguish between these two analyses, and then I'll give my own opinion about these two techniques. So, fundamental and technical analysis are two main types of analysis techniques or approaches for analyzing stocks. And both are really important and have their own importance in financial markets. So, one looks at the price movements and technical charts to determine the future direction of a stock, while the other one looks at the financial statements to find an intrinsic value of a stock, which further tells that whether the stock is undervalued or overvalued. So let me tell you about the differentiation between the two, and then I'll give my own opinions based on my experience. So the first difference is the data that they use. While fundamental analysts argue that the company always has some intrinsic value and they use all the financial information, which basically includes income statement, balance sheet, cash flow, and annual reports, and all these financial statements to determine that value, and then makes the decision whether the company is undervalued or overvalued. And on the other hand, technical analysts don't care about what value does the company have or it is worthless. So they only look for charts and indicators, from which they tend to look for patterns, which tells that a stock may form or forming a pattern that is bullish or bearish, which further tells that whether the stock is going to be up or down in the near future. So the second difference is time horizon. So usually fundamental analysts take a long-term view for a stock in the market, and they don't look for immediate gains such as expecting to get profit in a few weeks or months, or rather they take a long-term approach because, as I told you, fundamental analysis says that a stock price will be equal to its intrinsic value in the future, but there's no specific period. Sometimes there can be days to reach the value, and sometimes it can take months, and sometimes it's the years. So basically this approach fits for the long-term investors. And on the other side, technical analysis is mainly short-term oriented and looks typically at the short-term data. Like technical analysts use charts, and they look at daily charts, weekly charts, 2-minute, 5-minute, and 30-minute charts to identify the patterns. So this approach is really short-term oriented, where you may predict even the next minute's price move, while fundamental analysis can only determine a true value, and you gotta stick to that. So the third point is trading and investing. So this one is obvious that fundamental analysis is used for investing purposes, as you analyze financial statements and qualitative data over a long period of time. And sometimes data may be even for the last 10 years. So analyzing using fundamental analysis is for the long-term investors, while trading is basically for the technical ones, because this is the most appropriate style for trading, as there's no chance that fundamental data is related with trading, because it is only concerned with value, which will be equal to its share price at unspecified time in the future, whereas technical analysis is concerned with prices and charts, which determine demand and supply in this market. And these are the forces which changes stock prices. So as trading is short term and technical analysis focuses on short term, so technical approach becomes the best approach when trading in stocks. And now let me tell you about how technical and fundamental analysis is seen by the investors or traders. Well, fundamental analysis is quite famous when evaluating stocks. Mostly big institutional investors, banks, hedge funds use this approach to invest in stocks, as they mostly look for long-term approach in the market. While in Wall Street, traders give more importance to charts and prices. And coming to some criticism, fundamental and technical analysis both have their own critics. So there's a theory in the market which is famously called EMH, or efficient market theory, which states that a market price of a security always reflects all the information that is used to analyze the security. So it means that if you think that you can take advantage of the information that the company is undervalued or overvalued based on some facts and figures, then you are wrong. Because a stock price includes all the information at a given point of time. Now, this theory contradicts the very existence of fundamental and technical analysis, as fundamental analysis says that companies are under and overvalued, and hence you can take advantage of these situations. And technical says that all the information is reflected in the price, but you can take advantage of this situation by identifying patterns. But the theory says that any past information, any past price information is worthless, and you cannot take advantage because market has already identified that news and taken advantage of that news, which is now reflected in the current price. So both fundamental and technical analysis cannot help you when analyzing the stock, and hence you cannot earn profit from the market. So finally, let me tell you my views on both these styles of evaluating stocks. Actually, I have analyzed various stocks using both fundamental and technical analysis, and as far as I have known, both are really important. First of all, let me assure you that you can make money from the stock market. So the theory which I just told you about, that is efficient market theory, it doesn't make any sense. Although there are lots of people in this field who believes in this theory, but there are also who criticize this theory. And as far as my experience says so, you can definitely make money in the market, because I myself had made around 140% in a single year using both the fundamental and technical methods. So it's just that some think fundamental is good and some think that technicals are the only one that matters. And some use both simultaneously to ensure a better outcome. So finally, if you are a trader, then technical is good for you. And if you are a long-term investor, then fundamental analysis can prove to be quite good for you. But again, you can use both and it will result in a much better result. And that's it for this tutorial.